If you're buying a home in California, there's one document that guides the entire transaction, and this is called the Residential Purchase Agreement. Now, this is more than just paperwork, but it lays out your rights, responsibilities, timelines, and protection as a buyer. So, in this video, I'm going to break down the RPA in simple, plain English, so you'll walk away knowing exactly what this contract does, what to watch out for, and how to protect yourself in the home buying process. Okay, so this is the Residential Purchase Agreement. So you can see this is what you have to fill out whenever you want to write an offer on a house. So we're here using the CAR form. You can see the California Association of Realtors. So these are the most standard forms that you're going to need to fill out before you write an offer on a property. You can see it's about 29 pages and it's pretty dense, right? It's a lot of text, so it's definitely kind of intimidating. So the idea why I want to make this video is to kind of simplify it for you so you can have confidence when it is time to write an offer. And you can see, man, I have to read all this text. It can seem kind of crazy. So really want to make things a little simpler, a little easier for you to understand. Yeah, so I'm not going to go line by line because that would just take forever, but really just want to go over the main concept that might be a little more confusing and tricky for people who are not used to just reading contracts like these. So the first page is kind of called a disclosure regarding real estate agency relationship. And this pretty much just outlines what is the role of an agent, right? Because there's different roles that an agent can have. The first and two are pretty obvious, right? An agent can represent the seller. Second role an agent can have is to represent the buyer. But a third role is actually an agent can represent both a buyer and a seller here in California. So I think the most important thing to know is that agents can represent both and that they have to disclose it to you as the buyer. So let's say you go to open house and you meet the listing agent at the open house and you want this agent to represent you. They were also required by law to say, hey, I'm also representing the seller in this case. So just making sure you as a buyer, you know that these are the different roles of what an agent can do. So yeah, you just sign over here. Okay, you can see it's 2 pages. All right, now the next page is going to be the meat of the offer. This is a California Residential Purchase Agreement and joint escrow instructions. So this is pretty much, yeah, where you write like how much you want to pay for and the terms of your offer from a high level. So you can see the date prepared. This is an offer from, this is where you put your name as the buyer. Section B, this is where you put the address of the property you want to buy, here in the residential address. Example here is 1080 Saratoga Avenue. You see parcel number. This is a pretty standard number that comes with every address. It's very similar to like a postal mailing address, and this is something that you or your agent can look up pretty quickly. Okay, so this is the seller's brokerage firm. So this will be your seller's agent that you're writing the offer to. And then this is the buyer's agent, the buyer's brokerage firm as well. You can put the license number here as well. And then here's the matrix where you put the terms of your offer. So you can see purchase price. That's pretty straightforward. If you want to put all cash, you would check it here. Okay, so the next part is going to be the close of escrow. So close of escrow is really the moment the home officially becomes yours. Because when you make a big purchase like this, it's not often just you just send it to the seller. You actually, when you put the money, you actually put it in this third-party account, and escrow is going to manage that, and escrow redistribute the funds appropriately after everything closes. And normally the longest part of this close of escrow will be when the loan closes. So generally, most lenders close, let's say 25 to 30 days. Cash will generally be 10 to 15 days. But shameless plug, I do know some lenders that can close in 10 to 15 days, and that can really give you a competitive edge in this market because the seller can get their money faster, and obviously you get your property faster as well. So it's one thing to consider to know what type of lender you're working with because they can really give you an edge when it comes to this close of escrow field. Okay, so the next part is going to be the expiration of offer. And generally it's going to be 3 days after all the buyer signatures or 5 p.m. off the next day. But generally, when you do submit an offer here in the Bay Area, you generally know within 24 hours. Okay, so this next section, section D, is going to be the initial deposit amount. And this is pretty much generally about 3% of the purchase price. And this is if your offer does get accepted by the seller, that you have to submit these funds within 24 to 72 hours. And this again just shows that the seller that you're very serious, that you're willing to put money, put some skin in the game. So you could technically put 0%, but that's not going to make your terms very attractive to the seller. So next, this is going to be a loan amount. So generally, let's say you're supposed to do like a 20% down payment. So you put 80% of your purchase price here. You can do either fixed rate or initial adjustable rate. Generally, people do fixed rate because it's just more stable, but let's say initial adjustable rate, you can't get discount on the earlier years as possible. So if you know that you probably want to sell pretty soon and you're not going to go the full 30 years, generally people might do the initial adjustable rate because they might get a discount initially and then I'm just going to sell it anyways pretty soon. But I'll say 80-90% of the time people just do the fixed rate. They just use what the daily mortgage rate is going to be, right? And if you're going to do another loan outside the basic conventional loan, there's other forms you can fill out, the FHA loan, the VA form. And this is if you want to do a second loan, you can see an E2 as well. But again, generally people just do one loan as well. Here's section E3, there's an occupancy type. So I'm going to check, is this going to be a primary or secondary or investment property? All right, so G1 here, if you do want to apply for seller credits, and this is generally for extra cash you want on hand to use for the closing cost. Generally, you can't really do this in the Bay Area because offers are really competitive, but maybe if it's in a less competitive property, a property where it's been sitting on the market, you may be able to negotiate this. So you can save some money on top of the purchase price. But honestly, generally, I would prefer just to lower the purchase price because it will also lower your property tax value as well. But yeah, this is just one option that you can do to potentially save some money. All right. G3 is going to be a seller's payment to the buyer's agent. So generally, it's going to be about 2.5%. That's a standard rate. But if you want to negotiate lower or different rate, you can also put that here as well. H1, H2, H3, these are just verifications of how you're going to pay the property. So all cash. You probably want to use, you probably need a bank statement or like snapshots of your stocks. Verification down payment, closing costs, same thing. Verification of loan application. You can have a pre-approval letter. That's the most standard way to prove that you qualify for the loan. All right, section J here is the final verification of conditions. So this is pretty much the final inspection that you have as a seller to verify, hey, this house is okay. I want to go through with this property. Now, section K here, you have assignment request. And assignment refers to whether the buyer wants the ability to transfer the rights and obligations under the purchase agreement to another property. So this is not really applicable to most buyers here. This is really generally for investors and wholesalers. Okay, so the next part is contingency, section L. And this is one of the more important parts of the offers because this is going to protect you as a buyer just in case things don't go as smoothly as you would hope. And if you have these contingencies, you're at least able to get your earnest money deposit back. Let's say if things don't close. Okay, so the first thing is the loan contingency. So the loan contingency is like a safety net that lets the buyer back out of the deal if they can't qualify for the mortgage. So you would check this if you do want a loan contingency. Second is appraisal contingency. So let's say you write an offer for $1 million, but the appraiser comes and this property is only worth, let's say, $950,000. And if you don't have an appraisal contingency, then you're going to be on the hook for the extra $50,000 because the lender's only going to give you a loan for $950 for what it appraised for. So this is also one thing to protect yourself for not being on hook for the extra $50,000. All right, another section is going to be investigation of property. So this is pretty much going to be, this is the most subjective. This is pretty much, again, if you look at the property and you don't like it, you don't think this is what you want to go through with it, you can also have this contingency as well. Informational access to property is also very similar as well. It pretty much just allows you to visit the property. Now, it's next in L4, 8Ds insurance. So this is a pretty new thing here in California, especially in the wake of the recent wildfires. So let's say you can't get insurance on the home, then this allows you to cancel out if you have insurance contingency. And next thing is gonna be like review of seller documents, preliminary title report, common interest disclosures, review of leased or lien items. So generally, these are all going to be in the disclosure property. Before you submit offer, you'll review these. These will get you some information. If things aren't going as expected, you can put as a contingency. But generally, you should just read this beforehand and then just waive it before you submit the offer. That's generally what goes on here in the Bay Area. This next line is going to be sale of buyer's property. So let's say you want to sell your property before you put an offer. This is where you would check that. So it's contingent on you first selling your property before you want this offer to go through. Not a great term, to be honest, here in the Bay Area, because again, the seller is going to have to bank on you selling their property first. So generally, they're not going to want to wait and be patient. But that's maybe in a situation where you feel like you have to do it. This is where you would put this contingency. Okay, so M1 here is time possession. This is pretty much when you'll actually officially get the property. This next section is seller occupier vacant unit. So happens if the seller is going to still remain in the property after you buy the property. So you just want to mark that down. If it's under 29 days, it really shouldn't be an issue. But if it's over 30 days, it becomes an issue where this person only becomes a tenant because it's your property. So this is something that you need to sort out through. And this is why there's another form that if owner is going to stay 30 days after you close. But generally here in the Bay Area, most homes here are vacant. So it's not a high use case here in the Bay Area. Okay. Occupied units by tenants or any other than the seller, same thing as well. Same thing as seller. Someone's still going to live in the property that you would have to mark that. Seller's delivery documents, here document fees, compliances. These are pretty much all going to be within the disclosure properties. So here in the Bay Area, you're going to see this before you submit the offer. So generally don't really need to do anything. Here, evidence representative authority. This is pretty much only if you're planning to buy if you're trying to buy property through like a power of attorney or a trust or LLC and not yourself, you'll need evidence of this 3 days after acceptance. Okay, so the next part is section P, and this is the items included that you want in the property. So generally, if you see in the open house, you see these appliances. Generally, if you want to keep them, you would just check it here. And if you don't want them, you would uncheck them so the seller can remove them for you. So it's pretty straightforward here. All right, section Q is going to be the allocation of costs. So these are generally like the closing costs. So a lot of these stuff, like the natural hazard zone disclosure, it's already going to be paid by the seller because they're already going to provide it in the disclosure. So you don't really need to worry about that. Optional wildfire disclosure report. This is a new thing here in the Bay Area due to the recent wildfires in California. But generally, if you're not in a fire zone, you generally don't need this disclosure report. So the A and B is for additional reports, smoke alarms, carbon monoxide detectors, water heater. This is just more disclosures regarding the property. Escrow fee, this is going to be decided by the escrow company. So the next thing is something like title insurance, lender title insurance policy. Okay, so the next thing to know, these are going to be the basic escrow fees, the basic closing costs that come with buying a property, having a third-party escrow account. Escrow fee, title insurance policy, lender's title insurance policy. County transfer tax here in Santa Clara County, generally the seller's going to pay. City transfer tax, that's going to be based on whatever city that you have. So every city has a different policy regarding city transfer tax, who's paying. HOA fee, generally the sellers aren't going to provide this, so you don't need to worry about this. Home warranty plan. So as you as a buyer, you can submit a home warranty plan. This kind of just protects you in the case of something goes wrong in the house. So you initially buy the first few months. And yeah, generally this is something that you can put in your offer as well. Okay, so this next thing is going to be a property addenda and advisory. And this is going to be some forms that you may need to fill out if you're not going to do the basic, hey, you're going to move into this property. So like again, a tenant occupied property addendum, if the seller is going to still remain in the property past 30 days after close of escrow, this is something that you need to fill out. Next thing is the probate agreement purchase. This is if you are buying a property from the banks, right? If the seller foreclosed on the property, now the bank has sold the property. So you're not buying from a traditional seller. Manufactured home purchase addendum. This is if you're buying a mobile home. Tenancy in common. This will be if you have multiple buyers who co-own the property. So if it's not just you purchasing the property, but you and like a friend buying the property where you have to decide, hey, maybe I might own 70% or my friend might own 30% and vice versa. So pretty much it's just not just you buying the property. This is something that you need to fill out as well. Now, stock cooperative purchase addendum. Now, this is not really that you see here in the Bay Area, but in a stock, also known as a co-op. This is pretty much when you don't actually buy real estate, but you're actually buying like shares of a corporation that owns the entire building or property, and your shares give you the exclusive right to occupy a specific unit. And so, I guess it's not very common here in the Bay Area. It's really more in like big cities. We don't really have that here, so. But just let you know, this is what it is. And a mixed use purchase addendum. This is if the property that you're going to buy is going to be used for both residential and commercial purposes. Again, it's not used very highly here in Bay Area. Okay, so you can see here's other addendums that you fill out here. So again, this is more addendums here. I'm not going through everything here. It's pretty straightforward, I feel. Buyer and seller advisories, again, pretty straightforward. And then yeah, the rest of here is just pretty much just goes more in depth about, like you see, contingencies, the appraisal. So I think I don't want to go over this again. And you could read this more in depth on your own time, but just want to give you a high level of all these. You can see it goes pretty long. Keep scrolling. Okay, so section 26 is something do want to talk about. So this is called liquidated damages. And I kind of talked about this earlier regarding when I talked about the contingencies, but this is pretty much as a buyer, if you cannot perform, you can no longer pay the property or you don't even want to go through the offer anymore, right? Let's say, oh, now as a close of escrow, I'm about to get late. I might lose my job and I don't want to go through with this. And if you don't have a contingency, then you're still going to have to go through with 3% of the purchase price. So it does say any excess beyond 3% shall be returned to the buyer, but this is pretty much something that you need to be aware of as a seller, as a buyer, I mean, that anytime you do put an offer that if you're not able to perform, that you still have to give up the 3%. So section 27, 28, this is mediation, arbitration, disputes. Let's say if the buyer and seller have some conflicts, let's say the buyer says the seller did not perform the repairs, something like that. It could be really anything regarding this transaction, but that they would agree to go to a neutral arbiter. So 27, 28 pretty much agrees to that rather than going to court. That this is what you will go through instead. So more Fair Appraisal Act, terms and conditions, expiration of offers. So yeah, this is where when you're ready, you will submit, put your buyer signatures. The seller, if they want to fill it back, they can either accept it or do a counter offer, or they can write you as a backup offer because sometimes the first offer they might agree may fall through later. And this is where the seller would agree as well. Eventually, if they do submit an offer, they'd fill this out. Yeah, so this is a real estate agent's information where they fill out. This is where escrow would fill out. Okay, federal reporting requirement purchase addendum. So pretty much when you do buy a property, you need to declare it to the government. So this is pretty much the disclosure of what you need to fill out. Pretty straightforward. Possible representation of more than one buyer or seller. So yeah, you could have multiple buyers or multiple sellers. So you fill this out. Pretty straightforward. Next thing is the Fair Housing Discrimination Advisory, knowing that every property, there cannot be any discrimination, that race, gender, citizenship cannot be a way to discriminate. Everyone should have an equal opportunity to purchase a property. So that's what this is for. Pretty straightforward. Just fill that out. Buyer's homeowner insurance advisory, knowing that yeah, you're required to get insurance when you buy a property. Because next thing is wire fraud and electric funds transfer advisory. So this is pretty much advising you that, hey, be careful when you're paying money, that you're making sure you're submitting to the right people, because there can be, unfortunately, shady people in this world that might try to trick you. And so just be aware of that. Buyer and seller will pay that. Buyer investigation advisory. So this is pretty much you as a buyer. It's your responsibility to really inspect the whole property, not only just like the property itself, but also certain features of the property, like the square footage. You can see this is wood destroying pests, termites, soil stability, environmental hazards. So most of the stuff the sellers here in the Bay Area will provide it in disclosures. So just make sure you read this carefully. And last thing here is the California Consumer Privacy Act and disclosure and notice. So this is pretty much shows that, hey, some entities involved in a transaction, let's say the real estate brokerages, the title companies, the escrow companies, they may collect some personal information as part of doing business. So it clarifies that if these entities they do reach certain legal threshold, that you may have the right to know, what this information is, how it's being used. You can see PI, personal information. So this is not saying that's not like a waiver saying they cannot see it, but this is rather just saying that you can exercise your rights to these businesses to know what they're doing with with your information. Okay, so yeah, that's it about this video. Hopefully this video, if you found it very helpful, if you found some value from this video, feel free to give it a like. And if you have more questions regarding what are some more the finer details of writing an offer, feel free to contact me. My contact info in the description below. And with that, yeah, check out more videos on my channel about living in the Bay Area.